Hi guys, so I want to quickly explain some things to you about how you can consistently make profits on derivative trading. So just have to stick with me and see how I'm going to be doing this. So now, one thing you have to know about derivative is derivative market is an in-house market, which means they own the market. It is not like the forex market that we all know. So this market in Deriv is owned by Deriv. So you have to be careful in how you deal with it because you can lose your fund and you can win it. Now look at this kind of trade now. If this thing goes against me, I'm going to lose. So now the question is the amount I'm using to stake, is it the amount I can afford to lose? If it is the amount I can afford to lose, if I lose it, I won't be panicking. But if it's not the amount I can afford to lose, if I lose it, I will panic. So one thing I want you to get is these people has an inbuilt house edge. Okay, that no matter what, in the long run, the market will always try to favor them. No matter how you think you are making profit off of them, they will end up getting to eat you. But there is a way you can try to mitigate it, and that's what I want to explain to you in this tutorial, how you can literally mitigate it. So one of the way is I compound all my fund and I do 3 trade per session. 3 trade per session. So as you can see, I'm about to take the second trade now. So once I see my signal, I'm going to open just like this. So let's wait whether it's going to go our way or it's going to go against us. I'm having network connection, and that's another thing. You should be very, very careful, else it might lead to loss. And if you look at this, I'm having a call. You have to put your full on DND because we are dealing with tick here. We are dealing with tick, meaning that in 5 seconds. So if I'm saying my signal, it means in the next 5 seconds, the signal is only valid for the next 5 seconds. But if there is network issue, the 5 seconds would have gone. I hope you understand that. Okay. So I'm going to copy again everything and I'm going to paste it here. I'm telling you the right way of how we can literally beat these people, because you see this kind of thing is I have carried $5 to $50 in a day. That's flipping. But now I'm not talking about flipping this time around. What I want you to know is that first thing you have to understand is don't fund all your capital in Deriv. Fund the amount you can afford to lose. For example, if you are having $100, standard trading says that fund 1 to 2% of your capital. So go ahead and fund $1 or $2 to Deriv. It's as simple as that. Don't fund more than that. So once you fund it, keep trading. If you compound, if let's say you fund 2%, which is $2, if you compound successfully for 5 times or 8 times, $2 should be giving you like $1 back, isn't it? So you've made 50% of your profit. And in Deriv, you can withdraw as low as $1. You can always withdraw this $1. Are you getting the point now? So that's one of the ways you can use to accumulate your profits on Deriv. So do it in a way that you are funding $2 and in 8 trade you are making $1. Now the question is, what if one single loss occur? Yes, that is why you need to fund the amount you can afford to lose, because losses is inevitable, but your strategy has to be strong. You have to be convinced in your strategy. So I know that my own strategy is strong and I'm convinced in it that even, do you know what profitability means? Profitability doesn't mean that you won't blow your $100 even if you have big capital. Profitability is, especially when it comes to synthetic, profitability is when you fund $100, before you blow this $100, how much were you able to make out in total? So this is profitability. Okay, so if you fund $2, which is 2% of your capital, and you are making $1 daily in 8 trade, if your strategy is strong, if you have a loss, then you are losing $2 for that day. Don't fund another thing for that day till next day. So if you are taking 8 trade, $2 to make $1, 8 trade compounding everything, and you are withdrawing daily like that. Now it's going to take you how many days to make back your $2. It's going to take you 2 days. It's going to take you how many days to do 1:2? It's going to take you 4 days to do 1:2, and which is very possible. It's very, very possible. So now you are profitable. It's going to take you like a week to do more than 1:3. So if you are now using $2 to make $7 in a week, if the following week you lost this $2, you are still profitable. 7 minus 2, you are still profitable of $5 without even affecting your capital. This is the logic. So the long run, you will still lose whatever amount you fund to your Deriv. So instead of risking your amount of funding the whole $100, risk the amount you can afford to lose, then compound it to give you your actual result. 8 trade will give you $1. 15 to 16 trade is going to give you 1:1, $2 for $2. But it's advisable you do 8 trade, at least $2 for $1. Alright, so I'm going to be waiting for one more trade. So if you want to know how I take my trade, you can always contact me. I'm always available. Alright, so let's wait and see. I'm going to go live with you and show you how I take my trade, and I explain how it works for you. That's what I do for most of my students. So since the market is currently trending down, this is a sell market, and I'm seeing a green candle. I don't need to take it. I need a red candle to form and give me a retracement, then I enter, because I know that the market is trending down. So of course, if it give me a retracement and I enter, there is higher possibility that is after the retracement is going to start coming down, because the market is a downtrend. So this is more like a fake out. This is like a retracement, the higher retracement, something like saying lower low, lower high, lower low, lower high. So all I need is the red candle, not the green candle. So if this red candle can form very well, this current one, I'm going to take it. Alright, so that's how it works. I don't want this video to be too long. Alright, I think the candle is forming. So now, if I personally, if I lose this particular fund here, I can't panic because I've made more than it already. So it's more like I'm losing out of profit, not even out of capital at the moment. I hope you understand that. So this is the logic that you can use to compound your way out of the Deriv edge. So that's it. So now I've taken my 3 trade successfully for this section. I come back again for another section, and you have to know one thing. There are timing should be your friend in the Deriv market. There are some time you are meant to come to the market to trade. Yes, I'm going to explain that to you if we go live. There are some specific time of the day. There is a specific time of the day. In the morning, you are meant to trade on the Deriv, in the afternoon, in the evening, and in the night. If you exceed those times, are the time that at least there's going to be less manipulation, not as if you want to lose. But if you have a strong strategy, you are good to overcome it and quickly take your profit before anything happens in the market. So those are the time you should spot. It's just like when the forex traders want to go to the market, they tend to check the New York session, the blah 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 session. So same thing applies to this. You have to understand the platforms you are dealing with and know how they operate before you venture into it. The forex people understand the word, the market word, the fundamentals before they go ahead and do their technical analysis. So the synthetic traders need to understand the markets, their brokers, because they are dealing with the brokers here before they enter into analysis. Simple as that. So see you again in the next video.